What's going on, guys, and welcome back to another video. So in today's video we're going to give a full run through of my trading 212 portfolio, all 12 pies. We will look at how each of these pies are performing, and we are going to discuss yesterday's sharp market drop where we saw here that the S&P 500 tumbled the worst in over 4 months. So all my positions have went from, let's say, 3 or 4% in the green to just hovering at neutral, and some have even went into the red. So we will discuss each of these pies and we will talk about my plans to counteract this. But as always, if you're new around here, please consider smashing that subscribe button, as we're currently on 344 subscribers, which means we're only 6 away from my next goal of 350. So with all that being said, let's dive right into my trading 212 portfolio. So firstly, my overall portfolio is currently worth €3,719. We are currently down 0.53%, which definitely is a lot sharper drop than I expected. So let's say yesterday we were up €121 or 3.26%, and since then we can see the numbers drop all the way down to the red, and we're down 0.5%. So since yesterday we were down just under 4%. In terms of adjustments that I made this week, firstly, I sold my YouTube pie that was down here, and that was a value of €103, in which I reinvested into two separate pies. I put €80 of that into the healthcare sector pie and €23 into the materials. I also invested a further €150, which I split up three ways, €50 each, into the healthcare sector, financials, and my energy sector pies, which helped improve my dollar cost average at the time. So yesterday's overall market drop just kind of proves that there will be extreme volatility over the coming weeks and even months, and it shows how diversification can be key in these times. We can even see here just some generic notifications from Trading 212 that oil prices have sunk over 5%. There's a high sell-off because of the cratering COVID-19 infections and tougher lockdowns. And also we can even see that the EU market is just as bad as the US, where it has been sinking over 2% because of the lockdown looming again. So before we get into my plans to counteract this market drop, firstly we will have a look at how each of my 12 pies are performing. First up is the communication services. We are still in the green. We are up just under 1%. My three holdings down here, we can see that Facebook is keeping this pie afloat as of now. Facebook is up 6.5%, whereas Walt Disney and AT&T are in the red by 4.29% and 6.17% respectively. So Facebook is definitely keeping this pie afloat. Consumer discretionary, we have two positions. Tesla is up 6.28%, whereas McDonald's is down 1.15%. Consumer staples is up next. We have three holdings. Two are in the green in the form of Procter & Gamble, which is up 0.2%, PepsiCo is up just over 1%, and Coca-Cola is down 1.14%. Scroll down here, the energy sector is up next, and that is currently down 6.15%. Now you can imagine that the energy sector is usually volatile as is, so even in these kind of times there will be a lot more jumps in the red and the green. Both my positions, ExxonMobil and Chevron, are both down just over 6%. In terms of my ETF pie, currently my Vanguard S&P 500 is up 1.59%, and I don't have any position yet in my Vanguard FTSE 100 that I've added in since yesterday's video. But again, I'll be talking about my plans at the end of this video for the coming weeks and months due to this volatility. Another one of my pies that has been hit hard is my financial sector pie. My current 5 positions, Visa, MasterCard, Bank of America and Goldman Sachs, are all in the red, whereas JP Morgan Chase is the only one in the green, currently up 1.8%. We can see here that Visa and MasterCard have crashed, so Visa is down just under 10% and MasterCard is down nearly 14%, and that's got to do with their earnings as well. We can see Bank of America is down 1.56% and Goldman Sachs is down 3.56%. Now I just want to note that it doesn't bother me one bit that a lot of these companies are down. Like for example here, MasterCard is down nearly 14%, Visa is down nearly 10%. In fact, that actually kind of excites me in a way, because it just goes to show that you can buy at a better dollar cost average, which in the long term, and you've got to think long term here, that there'll always be market crashes and there'll be market extreme acceleration and more dips. That's just the way the market works. So if you don't realize that, I don't think investing long term is your thing. So you need to realize that when companies do drop, and we can see here that they have dropped significantly in a lot of cases, this is the time when you need to act and actually buy more. Next up, we have my healthcare pie, which is currently down 4.7%. All three positions are in the red. So Johnson & Johnson is down 4.38%, AbbVie is down 5.81%, and Pfizer is down 3.28%. In my industrial pie, 3M and Caterpillar, we are currently kind of at break even, just down 0.08%. 3M is down 1.8%, whereas Caterpillar is up just under 4%. My materials pie, currently we just have the one position and it's down just under 5% in the form of Barrick Gold. Again, that doesn't bother me one bit. Next up is real estate. It's down 2.13%, and my one position is realty income. Now that I've mentioned in previous videos, such sectors as the materials and real estate, I will be putting in more than one company into these pies in the coming weeks. I've already done so in the ETF pie in yesterday's video. If we scroll down here, my largest position is in the tech sector. We're currently up 2.89%, and my four holdings, 3 are in the green and 1 is in the red, and the one in the red is Microsoft, which is down 0.69%. Amazon is up 4.6%, Apple is up 2.2%, and Alphabet Class A is up 5.43%. So this kind of proves how diversification is key in a long-term investment portfolio, as different sectors react different to different market stimulus. So for example, the tech sector hasn't really been affected as such, whereas you see others such as the financials, which is down 5.38%. So again, each different sector reacts to different market outlooks. Next up is the utility sector pie, and we're currently down 4.16%, and in the form of waste management. And again, I'll be hoping to add more positions to this pie in the coming weeks. So next up, let's talk about my plans for this market drop. So with today being Thursday before market opens, I'm going to have a look through some of my pies after this video and see which were hit hardest, such as, let's say, the energy sector, financials, healthcare, etc. I'm going to look into each of those, and I'm going to look behind the fundamentals of each of these companies. And again, a lot of these fundamentals haven't changed at all. It's just because of the overall market outlook in the form of the elections and the virus that is going to be pumping fear into the market, which is going to create a large sell-off. So my plan, I think I'm going to add in a further €300 after this video. And again, I'll make an updated video tomorrow to show where I put this money after I've done my research and once I invested into the market. So that would bring my overall portfolio up to over €4,000, which I'd be quite happy with, as it will be 4% towards my overall market goal of having 100,000 in this portfolio. So it's kind of slowly getting there, but it is progressing over time. So my plan will be to invest a further €300 and drip feed it into different pies accordingly, which I will make an updated video tomorrow, as I just said. And also, what I'm going to do is I will be putting my money, drip feeding it in over the coming weeks as well. So I'll just be putting 300 in for now. And I do believe that the market will drop more in the coming weeks. So I just want to kind of slowly drip feed in to improve my dollar cost averaging. As for example, in such companies as Walt Disney, just because it's on the screen now, and others such as Coca-Cola, that these companies aren't going nowhere in time. So I'll be pumping in anytime I see those companies go into the red. And that's kind of the handy part of having a portfolio with all kind of blue chip companies. They mightn't kind of flourish as much as, say, growth companies, but again, they are safe and sound as such. So what I will be doing is anytime I see those in the red, I'll be pumping money in. And again, because it's only €300, I just want to slowly drip feed it in, because the next few weeks will be very volatile. So I just want to have cash on the sideline for when the markets do dip even further, and I believe they will get a lot worse in the coming weeks. So with all that being said, that kind of brings the end to today's video. I just wanted to make a recap of what I invested in this week and the changes that I made and how my overall portfolio was doing and my plans going forward. Again, I kind of believe that you need to show your good with your bad. So this is the first week in this series. I think we're on week 6 now, whereas the first week we're actually in the red. But again, it'll be good to look back on in the weeks and months ahead when I look back on these kind of videos when they're back in the green and realize that it was a good time to buy and improve my dollar cost averaging. So if you found this video anyway helpful or interesting, it'd be brilliant if you could consider smashing that like button. And as always, if you're new around here, please consider joining the group and getting subscribed to this channel, as would really help the channel out going forward. And I'd be also very interested to hear your own opinions on the market crashing and your own plans going forward in the comment section below, and I'll be sure to get back to you, as I always find these kind of conversations very interesting. So thanks very much guys, and I'll see you all in tomorrow's video where I'll be showing you where I put the further €300.